Hey guys, what's up? Welcome back to another video. In this video, I'm going to be looking into the recent earnings announcement that came out for Microsoft for their first quarter results for fiscal year 2023, which they reported for the quarter ended September 30th, 2022. And so we can see right here that the S&P 500 is down about 14% over the last year, and Microsoft is down about 27% over the last year. So Microsoft is definitely underperforming the market by quite a significant margin at the moment. But that being said, over the last 5 years, Microsoft is up about 181% in the same period that the rest of the market is up about 50%. So they're outperforming the market long term, but over the last year, they've definitely underperformed the market a little bit. And so in this video, I'm just going to look at their financial statements for their earnings results for the first quarter of 2023. And then I'm going to use a discounted cash flow model to figure out the intrinsic value per share for Microsoft so we can know what a good buying price would be to buy into the company from a value investing perspective. And so before we get into the financial statements, I found this article here that pointed out something pretty interesting for Microsoft's first quarter of 2023, and that is that they paid about $800 million more in data center energy costs for the first quarter. And we can see right here that their CFO, Amy Wood, pointed out that the firm's going to pay more than $800 million in extra energy costs to operate their data centers due to costs mainly increased in Europe. And so that's obviously going to eat into their profit margins. And this is something that not just Microsoft is having to deal with right now as a result of inflation, but other companies in the tech industry like Amazon, Meta, Apple, other companies like that, they're all having to deal with these increased costs in data center energy storage or data center energy costs. And as a result, that's eating into their cloud profits for the cloud sectors or cloud operating segments of their business. And so right here, we can see this is their income statement for the first quarter of 2023. And in that quarter, we can see their year-over-year growth for total revenue came out to be about $45.3 billion in 2021 to $50.1 billion in 2022. Their gross profit margin was about $34.6 billion in 2022 compared to $31.6 billion in 2021. And actually, of this total $50.1 billion of total revenue, about $25.7 billion of that was cloud revenue, and that increased about 24% year over year. So it was one of their faster growing operating segments, but it didn't increase nearly as fast as it increased from 2020 to 2021. And obviously, part of what contributed to that was the increased costs as a result of inflation for their data center energy storage. And so we can see right here that their net profit margin actually decreased in the same period that their total revenues and their gross profit margins increased. Their net profit margin decreased from $20.5 billion to $17.5 billion. And that came mainly as a result of this provision for income taxes. So I'm not really sure if this is made up of like a deferred tax liability or another form of increased tax rates for one of their operating segments. But nonetheless, it resulted in a decrease in their bottom line by about $2 to $3 billion. And then lastly, for their earnings per share, we can see that the decrease in net income also obviously had a decrease on their net earnings per share. And that decreased from about $2.71 per share to $2.35 per share. And so now if I scroll down to page 5 here, we can see that we have their balance sheet right here. They're comparing their balance sheet for September 30th, 2022 to June 30th, 2022. And during that period, their total assets have actually decreased from $364 billion to $359 billion. And most of their business is financed by liabilities as opposed to equity. They have $186 billion worth of liabilities and $173 billion worth of total equity. But their total equity, contrary to their total liabilities and their total assets, has actually increased from $166 billion to $173 billion. And that came primarily from the increase in retained earnings and the increase in additional paid in capital, but mainly as a result of their earned capital from retained earnings, which increased by about $8 billion, while their increase in additional paid in capital from outside investors only increased by about $2 billion. So that's obviously a good sign, because if their total stockholders' equity is increasing as a result of additional paid in capital from outside investors, that's going to dilute their previous shareholders. So they don't want that. Otherwise, that would reduce their stock price. And the last financial statement I'll look at right here is the cash flow statement. And we can see that they're comparing their year-over-year quarterly results. And for the first quarter of 2023, their operating cash flow came out to be about 23.1 billion, which is down from 24.5 billion year over year. And for their financing activities, we can see they've been returning a ton of value back to shareholders in the way of stock repurchases and cash dividends. They repurchased about $5.5 billion worth of common stock in the first quarter, and then they also paid out about $4.6 billion worth of cash dividends to their shareholders in the first quarter of 2023. So that's about $10 billion worth of cash returned to their shareholders for the first quarter. So definitely a great sign to see for Microsoft and for the shareholders of the company. And so now what I want to do is use this discounted cash flow model to figure out what the intrinsic value per share for Microsoft could be. I got these estimates from Yahoo Finance. They're estimating that for the next 5 years, Microsoft is projected to grow at about 13% year over year compounded annually. They had about $65 billion worth of free cash flow for 2021, and they currently have a net cash position after subtracting all of their debt on their balance sheet of about $30 billion, and they have about 7.45 billion shares outstanding. And so taking these metrics into account, if we wanted at least a 10% return on our investment based on their cash flow metrics, we would want to buy into the company at an estimated intrinsic value per share of $159 per share with a $79 50% margin of safety. And so compared to their current share price, based on these estimates from Yahoo Finance, it seems like Microsoft could potentially be overvalued at the moment, trading at $235 per share with an intrinsic value per share of $159 per share based on these cash flow metrics and this projected growth rate for the next 5 years. But coupled with that, I wanted to do a competitor analysis to see how Microsoft ranks up against the other companies in their industry. We can see that I compare them against Google, Apple, and Adobe, and their gross profit margin is definitely in the upper end of this competitor analysis, the higher end. They have a 68% gross profit margin, which is second only to Adobe's 87%. And then we can also see that their net profit margin was about 36%. So that's the highest net profit margin out of any of the 4 companies on this list. And then they had about middling return on assets of about 20.8%. So in terms of the competitor analysis, it looks like Microsoft is leading the charge in terms of bottom line net profit. And then they're doing pretty decent as well in terms of gross profit, but they could increase their efficiency in terms of getting a return on their assets. But it definitely looks like they're competitive from the industry standpoint. The only downside I would point out is that they're not currently trading below intrinsic value per share based on these estimates. But that being said, definitely encourage everyone to do their own due diligence if they're trying to value companies like this. I'm not sure about buying into Microsoft right now at this stock price for me personally, but I would definitely love to know what everyone watching this video thinks about Microsoft. Their earnings announcement for the first quarter of 2023, in my opinion, was pretty good, but a little disappointing just because I prefer to see an increase in earnings year over year for companies that I invest in. But let me know in the comment section down below what you guys think about Microsoft. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.